brokerages, analysts sound pretty optimistic for where the Nikkei 225 could be headed, noting, of course, that we've just come off a pretty tumultuous 2024, 19% higher. We did see a very volatile and weak Japanese yen. We saw also the Bank of Japan finally exiting out of negative rates as well. But as far as what are some of the drivers here, you have, for example, Citi Research as well as Goldman Sachs. They point to another leg higher when it comes to the corporate reform story. So deeper balance sheet restructuring, more of the unwinding of cross-shareholdings, divestiture of non-core assets, also consolidation in the market. And certainly we saw that in 2024 with some of those really high-profile stories like Seven & I, like the merger of Nissan as well as Honda. Also, they talk about the focus this year on improving ROEs as well and greater shareholder disclosure. So that's one side of it. The other side is just the broader domestic economy, that whilst there are still concerns around the structural growth longer term for Japan, that some of these analysts talk about the fact that we are seeing that sustained inflation as well as wages growth picture, that will support earnings growth, corporate earnings growth as well. And then, of course, there is the story about the BOJ, that the expectation, while it could be slow, it is that the Bank of Japan will continue to normalise monetary policy as well. That could also help in terms of propping up the yen, although we do know that a lot of the legwork has to come from the Fed as well. We just got some flashes a few minutes ago from the BOJ Governor Ueda. Nothing really to write home about. Really, he's just talking about the fact that the BOJ must be vigilant to risks in deciding the rate hike timing, noting, of course, that, about 8 weeks ago, many thought that there was going to be a move in December. There wasn't. He sounded pretty dovish. And now if you look at the swaps market activity, that's really pared back in terms of whether or not we could even get a move this month, that maybe it could be in March as well. But we did talk to some analysts. Let's take a listen to what one had to say.
Japanese companies are extremely overcapitalized. 60% of Japanese companies have more than 20% of their balance sheets sitting as net cash. So there's tremendous more room for improving ROEs simply from normalizing the balance sheet. The second important aspect, which touches back on the M&A issue, is the majority of Japanese companies still have loss-making business segments that they continue to support and coddle. And these business segments are not competitive. They need to either close them down or sell them off to other competitors to create sort of, merged companies that can be profitable and at the right scale.
Indeed, though, many did speak about some of the risks that could be on the horizon. They point, of course, to what could happen in terms of the tariff policy coming from stateside and the impact that could have on the Japanese economy. Also, some of the uncertainties in terms of the domestic political picture as well. And also watching, of course, a very volatile yen. If we do see significant strengthening, some say that for some of those exporters on the Nikkei, that could also weigh on the corporate earnings picture as well.